Ready to invest, but not sure if Wealthsimple is the right tool for your money in 2025? It's a big question. Wealthsimple has completely changed the game in Canadian finance, growing from a simple robo-advisor to a full-service financial platform. But as they've expanded, they've also gotten more complex. You need to know where they truly shine and where they might fall short for your goals. I'm here to give you the summarized pros and cons of Wealthsimple in 2025, covering everything from their classic managed investing to the commission-free self-directed platform. This review is for the beginner looking for simplicity, the experienced investor looking to cut fees, and everyone in between. Let's dive into the pros first. This is where Wealthsimple truly excels. Pro number 1, zero commission trading. This is their biggest selling point for the DIY investor. Buying and selling Canadian and US stocks and ETFs on their self-directed platform costs you nothing in commission fees. It's what allowed a generation of investors to stop paying $20 per trade at a big bank. Pro number 2, beginner-friendly simplicity. From the app's clean, intuitive design to the managed investing option, the robo-advisor, Wealthsimple is designed to remove friction. You can open an account in minutes, start with virtually no minimum deposit, and the managed accounts handle all the heavy lifting like rebalancing and dividend reinvestment automatically. If you're a hands-off, long-term investor, this is a massive win. Pro number 3, a full financial ecosystem. Wealthsimple is no longer just an investing app, it's a modern financial hub. The platform now offers a great high-interest checking account with no monthly fees and global ATM fee reimbursement, and they've been rapidly expanding into options trading, margin accounts, and even a credit card. It's a compelling, one-stop-shop approach. Now, let's look at the other side of the coin, the cons you need to be aware of. Con number 1, the currency conversion fee. This is the one that trips up a lot of self-directed investors. While U.S. stock trades are commission-free, there is a currency conversion fee, typically 1.5%, each time you buy or sell a U.S.-listed security in a CAD-denominated account. This foreign exchange fee can eat into your returns, especially on frequent trades. You can avoid it with a premium account that offers a USD account, but that requires a subscription or a high asset threshold. Con number 2, limited research tools for active traders. If you're a seasoned trader, you'll find the platform bare bones. You won't find the deep technical analysis, interactive charts, real-time level 2 data, or advanced screeners available on more traditional brokerage platforms like Questrade or Interactive Brokers. The focus is on simplicity, which often means sacrificing power tools. Con number 3, customer service and advanced advice. While the platform is digital first, getting a complex issue resolved can sometimes be a frustrating process, which is a common complaint for fast-growing fintechs. Furthermore, while the managed accounts do give you access to advisors, the level of dedicated, personalized financial planning is often reserved for clients in their higher tier, or generation, plans with significantly larger balances. The verdict. So, where does that leave us? Wealthsimple is the reigning champion for the beginner, the hands-off investor, and anyone prioritizing simplicity and low core fees. If you are building a simple, diversified portfolio in an RRSP or TFSA, their managed or self-directed accounts are an excellent, low-cost choice. However, if you are a frequent active trader, or need deep research tools, or often